In this ongoing series, we continue to build our total return TFSA from 0 to 100K. This month, we have a superstar stock with a total return of 50%. Hold on to your seatbelts, folks. This is going to be a good one. We are 7 months into the challenge with a total of $3,500 invested into this TFSA. We are adding $500 a month, as well as reinvesting any dividends we receive. Also, going forward, any form of super chat, super thanks, super sticker, anything with a super on it, we're also going to throw that into the pot. This is a total return challenge, so we are looking at not just the growth, but also the dividends. We have total return data for each stock, but starting today, we are going to look at real total return for this TFSA.
But Candace, what is real total return?
Great question, Hazel Nutterscotch. In a nutshell, the real total return compares the TFSA's total value, including all investments and any cash not yet invested, to the actual cash that was deposited. Many brokers will typically show you a total return based off of a comparison to the account's book value. So they're not taking into consideration that the dividends you are reinvesting are not new money entering the account. For this challenge, we have invested $3,500, but the book value of the account is $3,541.41. That $41.41 is, well, it's dividends received that do not factor into how much we invested, as they are, well, they're a part of the snowball. When I look at my return on the National Bank Direct Brokerage, they show me 5.23%, which is not the real total return. If we calculate the total return using only our invested amount, we get a higher result. Total return is equal to account value, which is $3,780.81 minus the amount invested, so $3,500. Then we take that sum and we divide it by the invested amount. Multiply that fraction by 100% and we get a real total return of 6.88%. So our real total return is actually 1.65% higher than what the broker reports. That's not too shabby. 6.88% for the TFSA is a good start, but what if I told you that one asset in that portfolio has a total return a wee bit above 50%? Holy banana bread. I can't wait to reveal which stock it is. Join today's conversation. Let me know in the comments if you use real total return. Thank you, of course, for your participation. If you love this sort of content, be sure to subscribe for more. And another huge thank you for that click. So far, we have invested $3,500 into this portfolio, and I simply can't wait to check in on how the stocks are doing. We will start by looking at our current lineup and any changes we made to them. We will start with Alvo Petro Energy with a ticker of ALV. We did not add any more shares this time around, and thus we are still sitting at 20 shares. They were our toad last month, and without question, they will be maintaining that dishonor this month. Their adjusted cost base comes in at $8.09, and their price is currently listed at, well, $5.78. Their continued price fall is concerning. I will not add to this position, nor am I ready to pull the zip cord on it yet either. We did receive some dividends, $3.72, so there is that. When it comes to their return on investment, that came in at negative 26.25%, and their total return after we did add in those dividends, that helped a little bit. Didn't help a lot though, negative 25.55%. They do have a pretty high yield of 12.965%, and we are expecting dividends again around the middle of April. I am hoping by next month we can see a wee bit of a reversal on this one. Up next, we have Alimentation Couche-Tard with a ticker of ATD. We did add another share this time around, and that takes them up to 4 shares in total. We've got an adjusted cost base of $76.52, and their current price, a little higher than that, $80.28. We have so far received 53 cents in dividends, so that gives us a return on investment of 4.91% and a total return of 5.09%. Their yield comes in at 0.872%, and we are expecting dividends around the end of March for this one. It was actually nice to see the return numbers creeping up a wee bit this month, though my expectations are a lot higher than what we're seeing thus far. Our next stock is Brookfield Asset Management with a ticker of course, BAM. We did not add to our position this time, so we are still at 5 shares. Their adjusted cost base coming in at $45.74, and their price a little bit up there, 55.03%. For dividends, we have received $3.01 thus far. Their return on investment, one of the nicer ones, 21.53%. Factor in the dividends, we get a total return of 22.86%. As we can see, last month month's GOAT has lost their title, as I did promise a 50%, and it was not for BAM. Their yield comes in at 3.711%, and we are expecting some dividends around the end of March. BAM has had another good month, and I really have nothing but praise for them thus far in the challenge. Next, we have Scotiabank, and this time around, I did not add any more, so we are still sitting at 7 shares. Their adjusted cost base comes in at $61.67. Their current price comes in at $64.50. We did receive some huge dividends from Scotiabank, actually $7.42, so it takes our total dividends up to $10.60. Their return on investment comes in at 1.98%. Factor in those good dividends, and we get a total return of 4.43%. Their current yield comes in at 6.574%, and the next dividends from those guys are coming out around the end of April. Their returns did drop a wee bit in January, but it's nothing really to worry about. We added another 3 shares to the Purpose Bitcoin Yield ETF, so BTCY, for a total of 26 shares. Their adjusted cost base, that came in at $4.84, and their current price is $4.91. We did receive some dividends, $1.09, and that takes their return on investment up to 1.45%. Factor in those dividends, we get the total return of 2.31%. Their current yield, it sits at 9.182%, and we should be receiving our next dividends around February 7th. This is an ETF that should add a good return over 2024 if Bitcoin performs as well as we expect. Up next, we did buy another share of Canadian Natural Resources for a total of 3 shares. They have an adjusted cost base of $84.55, and their current price comes in at $87.11. We also received $2 in dividends, taking our total dividend count on this one up to $3.80. So that is a return on investment of 3.03% and a total return of 4.53%. Their yield sitting at 4.592%. It's a quarterly dividend. We do expect the next dividend in early April. CNQ had a semi-okay month, but it sure would be nice to see them back in contention for the GOAT spot. Come on, Canadian Natural Resources, you can do it. Switching track to the CNR, we held our position steady at 2 shares. They've adjusted cost base of $151.74, and their current price is a nice looking $167.53. So far, we have received $2.37 in dividends, so we have a return on investment of 10.41% and a total return with the dividends of 11.19%. Their yield, it is sitting currently at 1.897%, and we are expecting some dividends around the end of March. CNR did just boost their quarterly dividend from 79 cents per share to 84.5, so that is not too shabby. The next stock is Decisive Dividend Corporation with a ticker of DE. We did add 4 more shares to bring our total up to 20 shares. They have an adjusted cost base of $8.40, and their current price is, well, look at this, $9.65. We received another 64 cents in dividends, so that takes their dividends up to $3, and their return on investment, 14.88%. Wow, and just wow. That does give us a total return after we throw in the dividends of 16.67%. Their yield comes in at 4.974%. It's a monthly dividend, and we are expecting more dividends on around the middle of February. If you have been following along, this stock started deep in the red and was our toad for like months. However, look at them now. If it was not for the 50% of another stock, they would have been in contention for the GOAT award. Well done, DE. Well done indeed. Up next, we added another 5 shares to Canoe EIT for a total of 30 shares. They have an adjusted cost base of $12.87, and they are currently priced at $13.02. We did receive another $2.50 in dividends, so that takes our dividend total up to $6.60. Their return on investment, that comes in at 1.17%. Factor in the dividends, we get a total return of 2.87%. Their yield on the high side, 9.217%, and that monthly dividend is coming out again in the middle of February. I can't wait. Canoe did increase their returns a little this month, which is always great to see. I'd like to see more though. Fortis is up next with a ticker of FTS, and we did not add any more, so we are steady at 3 shares. Their adjusted cost base comes in at $54.84, and their current price comes in at $54.01. So far, we have received $1.18 in dividends for Fortis. Their return on investment, it is in the negative 1.51%, and the dividends are not enough to pull us out on the total return. We're still in the negative at negative negative 0.80%. They have a yield of 4.37%, and we are expecting more dividends from them in March. Not the best month for Fortis, and definitely not that 50% stock, which is coming up, well, right now. The next stock, our 50% stock. Should we have like a drum beating or something for this one? I don't think it's any surprise. It's Hammond Manufacturing with a ticker of hmm.a. And we did add 3 shares for a total of 18 shares. I will throw in that luckily we added 3 shares before that really nice recent pump. Their adjusted cost base comes in at $7.71, and their current price at the time of recording is $11.65. On the dividend side, we don't have a lot, 18 cents. So their return on investment comes in at 51.10%. Holy banana bread, that is just absolutely beyond awesome. Adding in the dividends, we get a total return of 51.23%. As for their yield, it's really small, 0.733%. It is a semi-annual dividend, so we only get dividends twice a year, but as it would be, we do have their next set of dividends coming up towards the end of February. Last month, I said Hammond wanted that GOAT title back, and I really wasn't kidding, as Hammond simply exploded in late January. I guess they needed a little HMM on the moon. That was just awesome. Up next, we have Open Text with a ticker of OTEX. We did not add any more and still sit at 3 shares total. Their adjusted cost base comes in at $49.58. Their current price sits at $58.99. We have received 68 cents in dividends thus far. Their return on investment, a nice looking 18.98%, and that brings us a total return with those dividends of 19.44%. They're another quarterly dividend. Their yield comes in at 2.345%, and we should be seeing some dividends for them at the end of March. OpenText did great with a top 3 return for the month. They are a former GOAT, and it shows for sure. We did not add any more shares to RioCan, so we are sitting steady at 5 shares. Their adjusted cost base, that comes in at $17.31, and they have a price of $18.58. We did receive some dividends, a whole 45 cents, so that's not too shabby. Their return on investment, it comes in at 0.75%. Factor in those dividends, we get a total return of 1.27%. They had a yield of 5.813%. It's a monthly dividend for these guys, and we're expecting dividends on February 7th. I am still very bullish over the next few years for REITs, so look for me adding more to this one pretty darn soon. We added 1 more share to Stellar Jones for a total of 4 shares. Their adjusted cost base comes in at $80.26, so we get a current price of $79.26. As far as dividends, we have received 69 cents thus far. So their return on investment, it is in the negative, a negative 1.25%. Adding in the dividends, we do get a total return of negative 1.03%. Their yield, it's another quarterly dividend. It comes in at 1.161%. And those next dividends are due around the end of March. SJ is still in the red, but they are getting closer to the green, which is a good thing for sure. We added 4 more shares to Sir Royalty, ticker SRV.UN, for a total of 15 shares. Their adjusted cost base comes in at $16.37, and their current price comes in at $16. On the dividend front, we have received $4.36 thus far. When it comes to their return on investment, it is in the negative at this point, at negative 2.26%. Factoring in the dividends, we do get a total return of negative 0.48%. Their yield, it is currently coming in at 7.125%, the monthly dividend, and we are expecting dividends at, well, probably dropping the same day I'm recording this, to be honest. We did just miss the January dividend, so we may actually see a double dividend in our next update. These are the stocks we already held, and this month we're only adding 1 new position. Our new position is Pizza Royalty Corp with a ticker of PZA. We opened our position with, of course, 5 shares. So we have an adjusted cost base of $14.69, and the price is $14.69. There's really no other data yet because, well, we just bought them. Their yield comes in at 6.301%. That is a monthly dividend that we're expecting to see the first one in the middle of February. I do love royalty stocks, and Pizza is a good one, and I have some high expectation for them in the next year. Let's take a quick look at all of them together so we can see how this portfolio is taking shape. Instead of the harder to read National Bank view, this time around we will use my spreadsheet to take a peek. As usual, let's also take a quick look at the portfolio's diversification. Using Blossom, we can get a pretty nice sector breakdown. I do try to limit each sector to a maximum of 20%, though I'm usually not super concerned if I go over a wee bit, which happens to be the case as both the industrial and financial sectors are sitting at 23.5%. Financials did come down, but industrials went up 1% thanks to, well, you've guessed it, Hammond. Energy grew a wee bit, up 0.4 to 13.4%, and we moved the scale up for consumer cyclical to 12.6%. We also have materials at 10.9%, technology at 5.3%, utilities at 4.9%, and real estate at 2.9%. Healthcare came in on the lower side at 1.9%, and consumer staples came in at 0.9%. And then, of course, we have the communication sector, and that came in right at the bottom of the heap, so 0.2%. Next month's stock buys will absolutely be taking these numbers into consideration. So those of you who are wondering, what is that second number in orange? That's the average across all Blossom users, so you can see how far off I am from some of those Blossom averages. It is time to look at the toad and the goat of the portfolio for the last month. The infamous Toad Award for our worst performer of the month is once again going to Elvo Petro with a dismal return of negative 26.25%. This is definitely a stinker so far, and I really want to see better things from this stock for sure. And now for that GOAT award, we all know it's Hammond. We all know it's Hammond. They're back in their familiar role as the greatest of all time for the last 7 months at least. They came in with a mind-numbing 51.23%, and I don't know if anyone has a chance next month, as this is going to be the one to beat for a long time, it feels. So that is our update for this month. We'll be back here again next month to do it all over again. I sure am looking forward to buying the next batch. If, of course, you are interested in any of these stocks we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey by checking out this video on narrow moat stocks, and I will see you in the next video.